Hello, everybody. I'm J Pinkert. I'm with Cyber Trading University. How's everyone doing today? This is a little bit about the Forex training that we offer. We also have a live room. So how's everyone doing? Thank you very much, Adinda. Hello, Maud. How's everyone else doing? How are FX Street members feeling today on Monday after a big green day? Which is exactly what we had, was a huge green day on Friday. But that was then. Now let's talk about now. Okay, let's get to some of the charts here. As usual, we'll start off with the S&P 500 chart. Give me a Y if you can see the chart. Everyone see the S&Ps here? September contract. Is it clear? Yes? Okay. Okay, who was here last Monday? Anyone here last Monday, return visitor from the webinar that we held at the same time, same station last week? Well, if you weren't, my analysis was the potential of this 1300 level holding. We were calling for this pullback. I actually thought there was a chance that we'd take 1300 out first, but this was based upon the fact that I wasn't looking for a new low in the euro right away. The number I used was 124.50 for us to put in a higher low and then reassert itself, which it did. I admit that much of this rally, which was huge, a $7 rally in crude oil, 48 in gold, 30 handles in S&Ps, that a lot of it was massive short covering. You had a lot of people bearish, a lot of people looking for anything to come out of the EU, not to have any teeth, even short term. Saw a lot of talking heads on different financial stations that went into the event completely hedged, meaning all their long equity positions were hedged. So a lot of people, a lot of fear going into that event, a lot of shorts. So therefore we have this huge move in the S&Ps. S&Ps are about unchanged. Not a lot of follow through, but at the same time, not a lot of give back. In fact, crude is giving back half of its gains. Gold was down, giving up maybe a third, but has recovered. So the big question is, what happened last Friday for real? And when you have huge range days like this, or especially like this, the market's in a little bit of what I would call shock. Now, you know, it wasn't an auto wreck where the shock was from any kind of panic, but it's in shock because most of the participants, the shorts have covered. New longs are afraid to chase. And now we're going to find out if what happened last week was real. Crude actually giving back the most. And last week we talked about looking for a short position in the crude oil market because we had divergence here. So you still can't rule out a new low in crude. Let's take a quick look at gold. So it was much easier to make a call last week than it is this week, because what we were looking for happened, it manifested. Now the question is, what's next? Much more relative strength in gold compared to the crude oil, which builds the case of a potential, some more dollar weakness coming down the road, some more U.S. dollar Swiss weakness, looking for places to be short USD Swiss for another push down. Don't believe Canada is a long-term buy yet, looking around par 50. We'll get to those pairs in a minute. Still looking at the possibility of a bond top developing here. Bonds are having a good day after the ISM. ISM was a pretty weak number. We continue to hold this support. To me, looks like a descending triangle. Still think we're going to have a breakdown, which is going to be positive US dollar yen. Can you guys give me a Y if you're following this analysis and my market correlations up to this point? And if not, please ask me to clarify and I'll go back and do that. Okay. Anyone else? Okay. So let's get to the pairs now. I'm actually looking for some type of top in here, which is tying in with the fact I've been presenting this in webinars over the last several weeks of a significant US dollar yen rally that I believe is imminent, that basically we've been basing since last October, and I think we're going to see a nice move up towards 88 to 92 in US dollar yen this summer, which would imply higher equity prices. So let's get to the pairs now. Let's start off with USD CAD. Here's your hourly chart. We talked about sales up around the 101.50 level, which happened when crude was making a new low. And when crude started to rally, you had this dramatic sell-off in Canada. That even though the crude oil market has given back a lot of its gains, Canada has not given back this decline. We haven't even retraced 38% off this sell-off here. My contention is I'm a seller 40, 50 pips higher and a buyer 100 lower, 10 par and a half down here. I think this will be a better area to look at the long side of USD CAD. For now, I'd be looking to sell rallies, looking for par 55 target is what I have in mind here, which would be quality on the daily from what we had here to what we had from last week's high to down here, par 55. Plus, it's a fib retracement of this advance, this 600 pip advance here. Can you give me a Y if you understand my analysis here on USD CAD, its relationship to the crude oil, and what my near-term outlook is, and longer term. Longer term, I still believe that the bottom is in, and looking for an intermediate term buy down around the par 55 level. Looking for this to be equal from this point here. So for now, I'd be looking to sell rallies up around the 102.10, 102.20 level, looking for one more push down in USD CAD. An indicator. A lot of what I do is based upon form and correlation work and fib counts. And there's nothing fancy. A lot of what I do is RSI work and reversal formations like 3 drives to a top and bottom, which is what we had here. It's a classic 3 drive to a top formation. So I look for divergences. I also look for confirmations to give me trading direction. And I use correlations to help me diagnose relative strength and weakness so that I can be long and diagnose the relative strength as a long candidate and relative weakness as my short candidate. Does that help you, Dips? There are also many webinars archived here under my name at FX Street, and you could go over them. You'll get a feel for my work. I do share and teach plenty in here to my friends at FX Street. You're very welcome. Thanks for the question. Moving on to pound dollar, this 15-minute chart, I'm looking for a push up here as well. I don't think you could rule out the potential of the pound trading back to around the 159.5 level. So basically my bias is that last week was real for at least a while longer, which includes, one more good dip in the dollar, another push up in equity, and potential top in the bonds. Last week, this is what I was talking about. Last week, the call was 124.50. I think we were here Monday. It took till Thursday to get there. Actually, I was off. The low was 124.06. And felt that what we would do instead of washing out to new lows right away is that we dig our heels in and pop one more time, that you could actually possibly even make the case for a 129, 130 euro. So this week's going to be, obviously the line in the sand is last week's low, last Friday's low. But for now, I'm giving it the benefit of the doubt and be looking for fib retracements of this advance to try and trade it from the long side. We've given back 38% of Friday's rally. So could it be 50 or 61.8? Of course. But I lean more toward buying the weakness at this point than well, I think the whole market's, basically I joked about it back in May when people were very proud of themselves about sell in May and go away. But actually the sell in May part was right, but the go away part was not, at least so far. And I played the Frank Sinatra song. That's Life, flying high in April. Which is what the euro was doing. Flying high in April, and the market was doing. Shot down in May. But boy, am I going to be singing that tune when I'm back on top in June. So, very possible that we rally, gold included. If I'm looking for a weak dollar, that would be positive gold. And the gold chart actually looked more constructive to me today, Dips, than the crude oil chart. So I like it. And if you're a gold trader, you may want to start paying attention to this pair, US dollar Swiss. Okay. And it's my contention that this high in Swiss was a failing rally, and that we could have something like this from here, similar to what I was showing in the euro, and that we could trade a 93 handle, 92 handle, and this pair declining is positive for the gold. Does that help you? So just like the euro on a short-term basis, we retraced a little more than 38% of last Friday's decline. Perhaps it's going to push 50 to 61.8, but I'm a seller, which means I'd be a buyer on breaks in gold. That help, Jack? So that's my take there for the Swiss, looking for about a 61.8% retracement there. Everyone with me on that? Four hour. Yes. not letting me change the page here. Okay. You can see we'll wrap it up with the Aussie and the Kiwi. Can you guys see the Aussie? So the commodity currencies have been leading this whole advance. You still see that one, huh? Well, I tell you what, basically the same call on Aussie and Kiwi, looking to buy breaks, thinking 104 is possible, 105 in Aussie. And that's really a wrap. Sorry about the technical difficulties. Yeah, I probably have to shut down to come back in. So verbally, I'll take some questions. You guys have some questions you want to fire at me? In this brave new world, sometimes this stuff happens. Any questions? Same thing. I think that we can we're pulling back here today. I can make a case for 159-ish Hytham. I've learned that it's okay to say I don't know. I lean towards buying this break, but I'd rather buy gold because it's holding up better. I believe in buying the strength instead of the weakness. So therefore, my preference for getting short U.S. dollar Swiss over doing something in Canada right here. Does that help, Solo? Okay, thank you everybody for your patience with me. Next, I don't know if it could be. It could be. But let's just take it do the right thing today and tomorrow will take care of itself, Jack. Maybe it's only 3 weeks for this to play out into August. When did the market top? When did the market top in 1987? Do you know when in August? I'd keep an eye on that date. I don't have the chart in front of me right now, Dips. But pay attention to the Swiss. Thank you, Adinda and Maud. Everyone, have a good holiday. I'll be off on Wednesday, but I'll be here for the premium members on Thursday morning, and then another open webinar Thursday afternoon. Good luck and trade light in this thin environment, and then we also have the NFP on Friday. So tread lightly. Adios.